Sometimes you hear the word CP, other times you hear commercial papers. But what does this really mean? How do you understand the concept of investing in commercial papers issued by companies listed on the floor of the Nigerian stock market? The NGX is what I love to call it. This time around, we're talking about a particular company, C&I Leasing. They are into offshore operations, onshore operations, marine services, and leasing. They are big in the maritime sector. We're going to have that conversation because their commercial paper is out, and this is Series 5. 50 billion naira for the entire commercial paper. But Series 5 is 10 billion naira, right? 10 billion naira is for Series 5. We're going to have that conversation. But before then, let's even start with what do you need to understand about commercial paper? You never can tell if that might be the best investment instrument for you to take advantage of. And I've got no other person joining me on this episode of In Good Company. Idika Aja, who is a city gentleman. Thank you very much for coming to In Good Company again.
Yeah, thank you very much, Frank.
Commercial papers. A lot of people hear about it. Before we even go into C&I Leasing, their commercial paper right now in the market. I heard that it's closing on the 14th of March. But let's really talk about commercial papers. People are watching and they're like, oh, what are commercial papers? How can we take advantage of that investment instrument?
Okay. Commercial papers are short-term debt instruments used by companies, corporate organizations to raise money. Some of them use it for working capital and other things even for expansion. So it is a short-term investment that corporation or companies use. Normally, it ranges between at least not more than 270 days.
Okay.
270 days. And normally, you have the discount rate, you have the implied yield. The discount rate means the difference between what you're actually paying and the face value.
Oh.
What you're actually paying and the face value. You know, when they issue the discounts, when they issue the commercial paper, they give you discount. Normally, they say a discount rate.
Very true.
And in the case of C&I, I think the discount rate is 22.5%. That means that once the thing is issued, maybe let's use example, the face value of 1,000 naira.
Yeah.
And if you look at the 22.5%, that means you'll be paying, I think, 856.
Yeah.
Because actually the price of the commercial paper is the present value of the cash flows. So when you discount it, you discount the future value back to the present value.
It's similar to
bonds.
T-bills.
Yeah, it's similar to bonds.
Yeah.
Now, you have the discount rate, you have the implied yield. Now, the implied yield for C&I is 27. That means what you actually, an investor is likely to get at the end of at maturity. Because I think their own is 269 days.
Okay.
So at maturity, 27%, but the discount rate is 22.5%. So the discount rate is just the difference between what you are investing and the face value.
So, in summary, what he's saying is that commercial papers means you're giving your money to a company, you're lending them your money, and they're going to pay you with interest. It's just like what happens with the government as regards T-bills and FGM bonds. But let's go into the heart of the conversation, with is C&I Leasing. They are one of the biggest companies in the maritime sector. They are issuing 10 billion naira commercial paper. What do you think? What's your take about it? Do you think it's a broader measure to manage their debt? Because they've got a lot of debt exposure.
Yeah, the 10 billion, the 10 billion they are issuing now is part of their 50 billion commercial paper program.
Yeah, when did they start that?
We started in 2022.
Oh, 2022.
22. I think so far they have raised about 22 billion before this 10 billion. So normally, yes, it's part of their strategy. Normally, like I said, it's a short-term investment. If you look at their debt profile, I think as at close of December 2024, they have about 44 billion. And their loans and borrowing, maybe their short-term loans is about 37 billion.
Okay.
Which could be maybe the reason why they are going into commercial paper to try to rearrange or remanage their debt. Normally, maybe they have the other ones have a higher interest rate, and the commercial paper will give them a lower sort of cushion so that they'll be able to manage their debt profile. And then that could be the reason why it's part of their strategy to manage their debt profile.
Okay,
And if you look at it very well, I think their commercial paper came down. They were in 2023 it was about 19 billion, but in 2024 I think they came down to 7 billion. So that means they borrow, they use it, and they repay, which is very, very important.
So they have a record of repaying their commercial paper. What is your take about that? Do you think it will impact investors' confidence?
Of course. Now, if you borrow and pay, it means a lot. That raises your credibility and credit quality.
True.
And the most important thing which they have done is that if you borrow and pay from your operating cash flow, that means from your core operation, which is very, very important. This is exactly what they have done. If you look at their cash flow statement for 2024, you can see that they paid about 12.5 billion from their operating cash flow. That's operating cash flow. That is the cash flow from the operating activities, which is very, very important. That means they didn't rely from external borrowing or other things. They paid from their cash flow, which is.
So are you saying there are companies that can rely on external borrowing just to repay investors?
Sure. Some people, if you borrow, they now you refinance debts too. So you can look at you can look at the rates, and you can decide to go for a lower interest rate
that can now just carry trade.
That can now enable you to refinance. Maybe the existing one you are having, the rates are very, very high, so you can go for a lower interest rate. The one that has a lower interest rate to refinance the debt. So, but in the case of C&I Leasing, no, they paid the CP from their cash flow generated from operating activities, which is very, very good and which is very, very important for investors.
So let me take a look at a few of their numbers. If you look at their revenue, it grew by 75%. Their pre-tax margin also declined by 6%, and all of this is against the backdrop of post-tax margin decline by about 1.97%. What does this say about the company's cost structure, and what's your take about these numbers?
Okay, to put it in proper perspective, the pre-tax margin, I think, at end of 2024 stood at 6%, while the post-tax margin stood at 1.9%. So what is telling you that why revenue is growing, cost is growing at a faster rate. That is what is shrinking. That is what is contracting the margins, and it really show you how efficient.
Are there a lot of loopholes?
It shows how efficiency, the level of efficiency, cost management, and so on, and the cost pressure on them.
So do you think it's inflation that is the reason for that?
Yes, inflation could be part of it, and inefficiency too could be part of it.
Okay.
There are variables that put pressure on the cost that can make profit margin to contract. So, but the issue, the underlying factor is that why revenue is growing, the costs are growing faster than revenue.
Commercial papers are most commercial papers. Why are they are usually focused on institutional investors? What about we retail traders? Why you guys?
No, it is not. I don't think so. It is not really for only that C&I Leasing. This one they are just released. The 10 billion is for institutional investors, and indirectly too, retail investors do benefit. Do benefit because the commercial papers for retail institutional investors, that is where you have the mutual fund, the pension fund.
Yeah, true.
So I assume if you have a mutual funds account, you have investment in a mutual fund, because basically money market mutual funds, that is where you can equally benefit from it. For instance, you have an account with Stanbic IBTC mutual fund.
But that's that will be by proxy. You can't. Why can't a retail investor benefit from it directly?
No, it is not. It is not by proxy.
Okay.
Like I said, C&I Leasing is saying this particular one is for institutional investors. You understand?
Yeah.
Other companies have issued their.
10 billion is not small for institutional investors.
It's a program. 50 billion.
Yeah. Okay.
They already raised 22 billion so far. So this one is I think the number 5.
Yeah.
So they are issuing. So it's 5. So after this one, they'll still issue another one. So it's a series. It's 50 billion commercial paper. I think it was registered in 2022. So it's traded at FMDQ.
Let us take a look at their share price. From year to date of 2024, it dropped by 33%, and a lot of investors were a bit skeptical about their portfolio edging into 2025. But right now, we're seeing year to date of 2025, they've done about 5.8%, which is some decent numbers if you ask me. And a lot of people are saying, oh, yeah, a lot of investors are saying they're definitely going to recover. What are your takes about that? Do you think it's going to affect investor sentiment? And do you think it's going to bring back the lost confidence that a lot of investors have had because of what happened in 2024?
Yeah, no, you don't have to look at it from that angle, or just say because they lost in 2020, their share price declined in 2024, that investors have lost confidence. After all, in 2023, the stock gain, I think, returned about 75% in 2023. Now, in 2024, at least it declined by 33%. And they are coming up now, I think, about 5.8. Yeah. Now, maybe ranked about, I think, other 66 in terms of share price valuation on NGX, and I think it's the 90-something most valuable company right now. I think with a market cap of about 11.8 billion, which is still okay. Yeah. You understand? And most importantly, it has liquidity.
You can just.
It has liquidity. It has liquidity. That means I think it's the most 35th most traded stock now. So that means you can easily go in and come out.
Okay, so the company paid a final cash dividend of 5 kobo and issued 2 for 3 bonus in 2023. What's your take about that?
Well, whether you issue commercial paper or you issue debt, the most important thing for the retail investor, for stock investor, is the return they get in terms of dividend yield, in terms of capital gain. And they issued a dividend of 5 kobo in 2023 and a bonus issue. Now in 2024. Preferably, they are likely to issue dividends
after the 3% decline.
It doesn't affect that. What affects what we'll be talking about the operating cash flow. You know, the operating cash flow declined from I think about 14 billion in 2023 to 755 million in 2024 due to the payment of commercial paper, about 12.5 billion they did in 2024.
Yeah.
So with the decline in operating cash flow, give and take, yes, it's very unlikely that they will pay dividends. Even their retained earnings is about 7 billion. So I think they may prioritize expansion to dividends for 2024.
Declining marginal profit, if you look at that, cash flow challenges, they're really going through a lot based on some of their numbers that we have here. What would you advise investors? Would you advise them buy, sell, or hold?
Yeah, for retail investors, I think the share price is coming up at 5.8. So you can take it. It's still early in the year, and I believe that yes, they will come up if they sustain the momentum they did in 2024 in terms of revenue, because they have to grow their revenue to be able to sustain their earning growth.
So if they long term, is it a long-term investment? Would you recommend it as a long-term, short-term, mid-term for retail investors? Will you also recommend it short-term, mid-term, long-term for institutional investors?
No, for short-term investors, you can take a position.
Okay.
But for long-term investors, you have to weigh in their debt level. Look at their debt level. Look at their cash flow ability to at least to generate more, because the most important thing is the cash flow, which is very, very key. But like I said, the most important is not as if that they did not generate enough cash flow from the operating activities. They did, but they made huge payments repairing of that their commercial paper about 12.5 billion. So that really dropped their cash flow from operating activities. So for long-term investors, you have to watch it. Watch their debt level, ability to service their debts. When you look at their interest coverage ratio, these are the things you have to check out.
So you've been talking about watching their debt level, and if you look at what has happened over the years, you see that their total borrowings increased by 21% year on year, and that brought us to about 44 billion naira. Do you think it's quite healthy for them to go ahead with that? Or do you think it's a strategy to bring about growth for the company?
Okay, if you look at it very well, the term loans, what they call loan and borrowing, is about 37 billion of that 45 billion. So I think that's the reason why they are shifting towards commercial papers. Commercial papers, like I said, dropped from 19 billion in 2023 to 7 billion in 2024. I think it's a strategy for them to manage their debt level, especially go to short-term debts that can, maybe they have a little lever in terms of rate. I think they are managing it very well.
Buy, sell, or hold?
Well, for short-term investors, it's a buy for me. But for long-term, as a long-term investor, you have to watch those the metrics. Look at the debt level. Importantly, look at their return on equity. The return on equity dropped down to, I think, to about 1.94, which is significantly below the inflation rate. That means technically you are losing money from that angle if you look at the inflation rate, because their return on equity dropped down to 1.94. And then as an investor, it's very, very key. These are the things that you have to watch out. Return on investor, capital gains, dividend yields. So those are the things that will give you the return outlook if you are investing. So if the returns are not giving you, the numbers are not clicking, so you have to really watch it.
Our Gen Zs will say the numbers are not giving.
Yeah.
If the numbers are not giving. But on the final note, let us how can they partake in commercial papers?
Okay.
What are the modus operandi in getting
a commercial?
Yes.
Okay.
Would you walk into the banking hall? Would you?
Okay. Now, for C&I Leasing, they said it's for institutional investors. That means the retail investors like you and other ones are not included. But normally when a commercial paper is issued, if you want to participate, you get to your broker. Some of them, they do advertise and tell you give you the form, you complete the form. They give you where to pay money into the account, then not subscribe for you. And remember, it is like this 200. Normally, most of the CPs are 270 days.
What are the fees like? What are the fees if on the average, if you're speaking to brokers?
Oh, it depends. It depends. But what I know, if you are buying maybe shares, if it is shares, for instance, according to NGX rule, on the buy side, I think the total what we call the transaction fee should be about not COT, transaction fee should be about 1.43% of the total investment. That means the total number of shares you want to buy. Then, likewise, on the sell side, if you want to sell, maybe if you want to sell 10,000 units of your shares, and the value is about maybe, let's say, 500,000. So in all, you pay about 1.73% of that value. That is regulatory. That is regulatory.
Does it also affect CPs?
No, I don't really know how. I cannot say this is how much a broker will charge you for a CP. But what I know is that at the point you issue this PB, like I said, you have the discount rate, you have the implied yields.
What can I invest in? You've heard from Idika Aja, who's a city gentleman. He's been there and has done that. He's advised you on what to do regarding the 10 billion commercial paper issued by C&I Leasing. And amazing one, if you ask me. You just might want to take advantage of it at this point in time because it's closing in, say, 2 days or so. And so, who knows? It just might be your next investment vehicle to getting yourself financially free. My name is Frank Fagbo, and this is brought to you by Nairametrics TV. I'll see you on the next episode. Keep liking, keep sharing, and keep being profitable. Cheers.